Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now let's look at investment due diligence. So what is investment due diligence? Due diligence is an investigation or audit of a potential investment or product to confirm all facts such as reviewing all financial records. Investment due diligence refers to a process of extensive and intensive research to evaluate an investment decision considering all possibilities and verifying the information used. So, what should you look for when you're doing the investments due diligence? You have to look for the company's history and the background, the financial performance, the operating effectiveness and the earnings quality, the employee strengths, weaknesses, and commitments, the strength of the financial position, the cash flow assessment now and going forward, the tax due diligence, and you have to look at past annual and quarterly financial information, including the income statements, balance sheets, and the cash flow statements. You'll also have to review the sales and gross profits by the product, look up the rates of return by the product. Then you have to look at the accounts receivable, get a history of the pricing policies and past increases, and ask for all business tax details. Retrieve a sum of the debts and their terms, and get a summary of all current investors, and then get a summary of all the shareholders. So let's look at some of the types of investment due diligence. First is the commercial due diligence. This covers the target businesses, market positioning, and market share, including the drivers and the prospects. It seeks to obtain an independent perspective on the sales forecast as the most critical component of the target's business plan. Then is the legal due diligence. This covers a wide scope of legal matters, including proper incorporation, ownership, contractual obligations, ownership of the assets, compliance, and litigation. It seeks to confirm the validity of the rights and the absence of legal risks which could undermine the value of the investment. Next is the financial due diligence, and it seeks to both validate the investor's valuation assumptions by looking at historical performance and identify financial uncertainties and exposures which could disrupt the business or result in additional costs to the investor. Then there's the tax due diligence, and this could be viewed as an extension of the financial due diligence, where the focus is on identifying potential additional tax liabilities arising from non-compliance or errors. So let's look at the steps in the investment due diligence. First is the capitalization of the company. You have to see if it's a large cap or a mega cap companies. Then it will give more stable revenue streams and will have less volatility. Mid cap and small cap companies will have more fluctuations in their stock price. Then step 2 is revenue, profit and margin trends. You'll have to calculate the price to sales ratio and the price to earnings ratio, look at the revenues, the profits, the trends in the margin, and is it consistent. Next step is looking at the competitors and industries. Looking at the major competitors in each line of the business, if there is more than one, may help you nail down just how big the end products and the end markets for the products are. The next step is look at the valuation multiples. Multiples such as price earnings ratio, price to book ratio, the enterprise multiple, and the price to sales or revenue ratio. These multiples highlight the valuation of the company as it relates to its debt, annual revenues, and the balance sheet. The next step is management and share ownership. High personal ownership by top managers is a plus, and low ownership is a potential red flag. Next step is balance sheet exam. You have to see the overall level of assets and liabilities, paying the short-term liabilities and the long-term debt held by the company. Then you have to look at the stock price history. Has the stock price been choppy and volatile or smooth and steady? Then you'll have to look at the stock options and the dilution possibilities. You have to see all the outstanding stock options as well as the conversion expectations given a range of future stock prices. The next step is expectations. Long-term trends affect the industry and the company-specific details about partnerships, joint ventures, intellectual property, and new products and services. These will all be detailed in the annual report. of each year so you can see what the company is expecting for its future and what it's hoping to perform. Next, you'll have to look at the risks. This is the last step, and you'll have to understand both the industry wide risks and the company specific ones. The legal or regulatory matters, you have to see if the company is eco friendly and what kind of long term risks there are. If there are any legal issues, you'll have to consider all these steps for the investment due diligence. So let's look at the overall process. You'll have to do a pre-analysis of the financial business case, fully check the documents, a full analysis of the business case and plans. You have to do a risk analysis, a final offering creation and ongoing monitoring, and analyze the purpose of the project. This is a whole cyclical process which will have to keep being repeated periodically to understand where your investments are going and how they are performing every time. Now let's look at the pros and cons of investment due diligence. The pros are that you can review the financial records, the income statements, records of the accounts receivable and payable, the balance sheet, the tax returns, including the business activity and the statements for the last 3 to 5 years, the profit and loss records, and the cash deposit and payment records. The cons is that the significant value involved in buying a business both in time and money. The quality of the financial information can vary significantly. So, even if the company's income statements and financial records provide a very positive view, there could be a sudden news development which could affect the company. So, there's only so much that the research can help. The brevity of the information provided in the negotiation phase of the sale and purchase transaction can vary. So please keep that in mind with investment due diligence. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free.